Welcome back to PhatBear Pod. I'm your host, PB. First, I want to correct a mistake I made on the March 22nd episode. Turns out, Exponent Finance is not running any points campaign currently. I found out about this by diving into their Telegram. You can still earn points for other projects listed on there, though. With that, let's dive into today's mess, starting with Bitcoin. Bitcoin's lounging around 87K like it's some kind of crypto royalty. Too good to dip below 85K, but too lazy to push for 90K. This price action's got all the excitement of watching paint dry on a mining rig. It's hovering around that 200-day moving average like it's some sacred line in the sand. The total crypto market cap's at $2.86 trillion. This number's up a smidge, probably because some altcoin pumped 30% yesterday. Meanwhile, the 24-hour volume's at 76.8 billion, decent, but not exactly the frenzy FOMO fest we'd see in a real bull run. Money is moving, sure, but half of them are probably bots. Bitcoin dominance at 60.5%, the king's still wearing the crown, and the altcoin peasants are bowing as usual. The alts might get a crumb if BTC decides to nap, but don't hold your breath. I've got bags of shitcoin from 2023 still waiting for their moment. And then there's a fear and greed index at 34, the same as yesterday. It's like the whole crypto space is collectively clutching its pearls, waiting for something next. On the alt side, the top gainers of the day are Movement, Solana, and Kronos. The top losers are Particle Network, Nil Leon, and Pi Network. For some macro spice, we're riffing on Asia's weighted GDP growth, projected at a sprightly 4.5% this year. That's a fancy way of saying Asia's economies, mashed together by size, are growing at a decent clip, faster than the global average, which is limping along at 3.3% according to the IMF's crystal ball. Asia's already a hotbed for crypto madness. Statista pegs the region's crypto mark at $17.4 billion in 2024, with 265 million users expected by year-end. That's 5.8% of the population, and with GDP ticking up, you can bet more normies are going to stumble into the degen life. But it's not all going to crypto moons. Rising tariffs from Trump's tantrums could kneecap exports, and if China's property mess flares up, that extra cash might just pay rent instead of pumping Doge. Let's go to some crypto news next. First up, Ripple and the SEC. After years of legal mud wrestling, Ripple's finally got the upper hand, and now they're getting a refund like it's a Black Friday return gone right. That's right. The feds waved the white flag, ending a saga that's dragged on longer than a bear market. The court had already fined Ripple $125 million back in August 2024, a slap on the wrist compared to the $2 billion the SEC originally wanted. Now, Ripple's getting some of that cash back, $75 million of it, but think of it as the SEC handing over a grudge in my bad check. Next, Trump Media and Crypto.com are teaming up, because of course they are. Trump Media and Technology Group, the folks behind Truth Social, announced a partnership with Crypto.com, the exchange that's somehow still standing after the FTX fallout. This collab's got all the vibes of reality TV crossover, flashy, loud, and wholly unexpected. Details are thin, but the gist is Trump Media is dipping its toes into crypto waters, preparing to launch a series of Trump crypto ETFs and related products. Crypto.com's bringing its exchange muscle, and given Trump's recent pro-crypto flexes, like that strategic crypto reserve he's obsessed with, this feels like a match made in hype heaven. Finally, BlackRock's Buttle Fund is expanding to Solana, because why let Ethereum have all the tokenized fun? Buttle has already sucked up almost $2 billion in investments by tokenizing boring old treasury bonds. Now, it's launching a new share class on Solana, the blockchain that's somehow still the future, despite every other chain claiming the same. Solana is fast, cheap, and occasionally congested, but BlackRock doesn't care. It's all about slapping a blockchain label on Wall Street's leftovers and calling it innovation. The press release says it's the largest yield-bearing tokenized treasury on Solana, which sounds impressive until you remember we're still talking about fancy IOUs. Ex-users are losing it, shouting Solana to $200. BlackRock's move is a win for institutional clout, sure, but don't expect it to save your altcoin dreams. It's just more suits cashing in while we plebs chase pumps. Time to step over to our DeFi space. Hyperliquid, Hypercore, and HyperEVM are finally holding hands on mainnet. And it's about damn time. Hyperliquid, the DeFi perp dex that's been flexing its 1 billion daily volume like a gym bro showing off biceps, just rolled out this integration yesterday. Hypercore is a high-speed backbone of their L1, built for spot trading and perps, while HyperEVM is their Ethereum virtual machine playground for smart contracts. Now, they're linked, meaning you can shuttle assets like their Hype token between the two without some sketchy bridge that'll get hacked next week. Developers can use a spot send action or mess with ERC20 transfers, blending DEX speed with sex vibes. X posts are hyping it as DeFi next big leap, but I'm over here muttering, great, another shiny toy for whales to manipulate while my Hyperliquid alt bags collect dust. Still, it's slick. Hyperliquid's team says it's immutable once linked. So test it on testnet first, unless you enjoy losing funds to your own stupidity. I'd say it's a rare win for usability, but don't expect it to 10x your hype overnight. Switching gears, Particle Networks launched its party token, because apparently we needed another acronym to forget. Particle is this modular L1 crew trying to fix blockchain's UX mess. Think single sign-ons and chain abstraction, so you don't need a PhD to swap tokens. The Part 1 token dropped recently. X-chatters calling it the future of Web3 onboarding, with some claiming early airdrops hit wallets yesterday. Cute, right? A $1 billion idea in a market that still can't explain gas fees to my mom. I'd be more excited. But after so many game-changer tokens, I'm just wondering how long till parties a 90% dip special on Binance. Still, if they pull off seamless cross-chain stuff, maybe I'll eat my words. Next, Binance announced that it kicked a market maker to the curb for screwing around with Movement's token. This wasn't just a slap on the wrist. It's a full-on get-out-and-don't-come-back ban. The story starts back on December 10th last year, when Move token got listed on Binance. One day later, bam, this unnamed market maker dumped 66 million Move tokens like it was unloading a bad Tinder date. Little to no buy orders, just a massive sell-off that netted them a cool 38 million in USDT. Binance found out who this was and hit them with the ban hammer. Movement's response? They're playing the shocked card harder than a reality TV star. The foundation swore they had no clue this was happening, claiming they picked this market maker because it had ecosystem cred. Once Binance clued them in on March 11th, they cut ties faster than you can say rug pull, alerted other exchanges, and teamed up with Binance to claw back the funds. Lastly, the airdrop we'll look at today is LevelUSD. So, LevelUSD is a stablecoin protocol that's trying to reinvent the wheel by pegging itself to the dollar with a twist. It's powered by restaked dollar tokens. Fancy, right? Think USDT and USDC. But instead of just sitting there, they're tossed into lending protocols and DeFi yield farms to generate returns. Launched by Level, a project that snagged 3.6 million last August and another 2.6 million this month from big dogs like Polychain and Dragonfly. LevelUSD hit the scene with a market cap that's already blown past $85 million. Current APY is floating at 6.86%. But let's be real. We're not here for the yield, we're here for the airdrop. Level's running an XP program to juice up engagement. And that's your ticket to farming this airdrop. No official drop date yet, typical crypto tease. To farm it, mint some LVLUSD. You can swap your deposited USDT or USDC for it on their site. Stake your LVLUSD for yield on their earn page. That 6.86% APY isn't just for show, it's real on-chain and beats the hell out of your bank's 0.01%. For the overachievers, pair LVLUSD with other DeFi plays by leveraging on Morpholabs, yield trading with Pendle, or LP on Curve. Sounds sexy, but it's also a good way to lose your shirt if you don't know what you're doing. That's it for today's episode. I'll see you guys back here tomorrow.